All right, hello again. You're listening to the Blockchain Socialist podcast, and for today's interview, I have Ori Shimony. He works at dOrg in R&D. dOrg is a full-stack Web3 development collective, and he also works at Polyrap. So, hey, Ori, how are you?
Great. Thanks for having me.
Maybe to start off, could you actually just give an introduction to yourself and how you got into the blockchain space? You're working on a couple of different really interesting projects, and definitely want to hear about your experience at dOrg.
Sure. Yeah, so I'm Ori. I'm an operator in the crypto space. I've been involved since discovering Bitcoin in 2014. I do research, I'm a software developer, and then also have gotten interested in the legal side and kind of political ramifications of crypto. And so I try to help different projects with anything I can, especially with like getting started and planning out roadmaps and how they'll actually touch real people with what they're building. So a little into how I got into crypto. I was studying anthropology in undergrad when a friend showed me Bitcoin, and I was instantly kind of fascinated with the mining process in particular and how it kind of solved the double spend problem in this elegant way, sort of like BitTorrent solving the file sharing problem, but in this way more sophisticated problem space where you're actually dealing with like value, not just files that could be infinitely copied. And so I basically shortly after that decided to take my first CS course and then add a CS major so that I could actually understand how to build some of these systems myself and apply the peer-to-peer approach to different problems that were more interesting to me than file sharing and money. And then I got super lucky, and a cryptography professor at my university offered a cryptocurrency course like the semester after I took intro. So I took the crypto course and then went fully down the rabbit hole. I ended up TAing the course afterwards and then starting my own research on extensions of Bitcoin to other domains like decentralized fund management and then also bandwidth incentivization in Tor. So yeah, I could fast forward a bit to 2017 when I joined a company trying to use crypto for micro lending and remittance in West Africa, where I actually did our smart contract development as well as on the ground user research into how this magic internet money might make local practices like Susu banking and lending circles more robust and resilient to the external financial arrangements that were kind of being imposed on people there. And so around the same time, I also was helping run an event space in Brooklyn where we ran workshops for a wide range of people in the community on how to leverage tokens, NFTs, DAOs to kind of improve urban life in various ways, which was a lot of fun. But I basically realized that crypto infrastructure was not mature enough for most of these real world use cases. So then I joined up with a couple engineers and we formed dOrg.
Yeah, I was about to say, that was pretty early when you were working on the Brooklyn DAO stuff.
Yeah, that was like mid 2018, I would say, and into 2019. And we were basically gathering artists and like civil society people and working people from mainly Bushwick and Ridgewood, and then just chatting about like art tokenization, decentralized governance. And so it'd be a lot of talking and specking out architectures that people had in mind for DAOs that would help the community. And then we would use some of the tools that were available. So DAOstack was basically online, Aragon was basically online, but they were really hard to use, and you needed to like, obviously like today, have a MetaMask and load it up with gas. Gas was cheaper, but you still needed some ETH. And so there were a couple of these like barriers that made it unrealistic to just, throw a DAO on the street that random people could join that would actually like affect the community. So yeah, we did a lot of like pilots, but it was really hard, with the tools to make anything have traction.
Yeah. But yeah, I thought it was really interesting. I read the Medium post about Brooklyn BK DAO that you shared with me, and I thought it was really interesting how like the framework that you used around separating, I guess, having three sectors of society rather than like sort of the standard approach of thinking of two sectors as in, you have public and private, and, in the private sector is basically where private interests and capitalists live. That's the bad one. And then you have like the public sector, which is like, I don't know, sometimes it's like sometimes good, but flawed. But I like that.
Right.
I mean, thinking about this third sector, this sort of like social autonomous sector, I thought was really interesting.
Yeah, so yeah, I would say depending on which side of the political spectrum you're on, either the private is the good one
Right.
or the public is the good one. I would say they're both the bad one.
Right.
And so like the one that actually kind of gets things done in society is that third pillar, which is like civil society, like you said, like this autonomous sector, and this is like labor unions, universities, political parties, very nonprofits, NGOs, just the whole world of people coming together to manage their affairs. And so this used to be like a way more vibrant part of at least American life. And then, government gets bigger, corporations get bigger, and everyone forgets that you can actually uh, form coalitions with your neighbors and get things done yourself, provision your own, services. And so I've always seen crypto really as like the reemergence of the civil sector. It's like giving the civil society, muscle again, an actual ability to like move economic resources and attract the attention of people. And so that's basically the framing I was interested in for BKDAO, because you had all these people that are very active in like the local urban civil society, but they're always going to large corporates and to large nonprofit foundations for funding, right? So they're all wasting a lot of their time just grant writing and kind of shifting around their narrative and their branding to suit the interests of the donors or shareholders of these organizations. And so the idea with BK was, what if we just had a DAO that anybody could donate to. And then there was basically reputation for the different civil society actors, and they could use that as a shared source of funding instead of each one of them replicating the infrastructure to go and get grants from all these different bodies out there. So eventually, maybe the corporates and the nonprofits actually just would put their funding that they would have put to these various organizations into BKDAO, and then BKDAO would be the allocation mechanism for the community. And so it was mainly a thought experiment and like getting people on board and specking out how it would work. But yeah, we definitely did a lot of like MetaMask onboarding and yeah, figuring out like governance dynamics and how the reputation would flow.
Yeah, that's awesome. I mean, it's awesome that I feel like you were maybe like it is cool that you were so early, but maybe you were too early about that. But now it seems like we're sort of getting past that point where I think at least like the applications and like the user friendliness of stuff is improving a bit to where we can get closer and closer to that. But I agree. Like I think that yeah, blockchain is sort of this world where this third sector is really uh, well gives tools for this third sector that didn't really have before.
Exactly. Yeah.
But maybe could you explain a bit what dOrg is, since that's the main sort of endeavor you've been working on.
Yeah, definitely. So dOrg started off and still is a collective of engineers, designers, like project managers from around the world who basically joined forces to build Web3 infrastructure. So at the time, we noticed, okay, this DAO stuff is really interesting. All these coordination mechanisms are quite interesting. But, we have to just apply our efforts to building the missing pieces and basically just being like this servant of the ecosystem that does what's needed, almost agnostically, but with some directionality to just help move the ball forward. And also at the same time being an example of how you can actually use these coordination mechanisms to get stuff done. So we actually started dOrg as a DAO, and so the idea was that we're building things to enable DAOs while running ourselves as a DAO, which was kind of radical at the time because I don't think there was a single DAO that was actually like a business, right? Like that was actually providing services or earning revenue, right? At the time, DAOs were hobbyist. It was kind of the most fringe in crypto. It was like, oh yeah, DAO is that thing that'll work one day, maybe. And so we're like, hey, I mean, the tools are good enough. We could just like run a software development collective as a DAO, and we ended up finding a lot of like the problems to doing that along the way, but it was super valuable, and it got the ball rolling, at least for us. And so yeah, we generate income by helping projects build things like governance frameworks, DeFi protocols, developer tools, and since we're all software engineers, it's easier for us to deal with the pains of using a DAO. If something's broken, we can go in and fix it. And so a lot of our earliest clients were actually the DAO frameworks of the time. And so we would build extensions to the DAO protocols that we actually needed, and then we would dog food them. At the same time, we would service entirely unrelated clients, like building a UI for a DEX, right? Or building like a node patch for like a caching service.
Yeah, when I go through dOrg, from what I understand, it sort of sounds like um, basically when you say like a Web3 collective, it's sort of um, like a shifting cooperative where like things are sort of like a very, very fluid type of cooperative of just like roving nomadic kind of like developers around the
Totally.
world.
Yeah, no, exactly. The key principle when we started was we want to like keep the flexibilities and freedoms of freelancing, which, a lot of people really love, but without losing the benefits and the support structure of having a team, that typically comes with employment. So we wanted to kind of get the best of both worlds and saw DAOs as a way of doing that. Because you even look at the traditional co-op model, which was, a big part of the inspiration in the early phases. Like I had read Ours to Hack and Own by Trevor Schultz and Nathan Schneider, which is about platform co-ops, and then Ellerman's The Democratic Worker-Owned Firm. So I was getting really familiar with like the fundamentals of co-ops and the underlying kind of economic theories and then political kind of justifications. And the problem I saw still was this kind of archaic idea of like um, I belong to a particular company and I am fully on that. And so you have this idea in the co-op world of one person, one vote, which seems great because it's okay, democracy, we're all equal, we're all humans. But if I'm working 2 hours a week on this one project and then dedicating 30 hours a week to this other project and maybe 6 hours a week to a different project, I shouldn't necessarily have equal weight, as the person who's full time dedicated to the one I'm dedicating 2 hours to. So we had this idea of basically weighting the influence of people by their commitment levels to the project. And so over time, you would have like the power and then the economic benefits distributed to the people who contribute to the most to that collective. And it's quite different, like as a vision for where yeah, like co-ops go than traditional co-ops, which I think are really like still in the industrial mindset of, like the whole like traditional labor union mindset with like a full benefits package and everything like that. So we're trying to make things more adapted to that like world of precarious labor and lots of projects, but then create this like safety net and these different like overlays of networks that people can opt into to get benefits, and then also leave if it's not suitable for their purposes, or fork and create like new versions with other people.
I've noticed this in a lot of the DAO space where there are certain similarities to, I guess, not just freelance work, but also kind of gig work, which is usually considered to be like quite precarious types of work. But at the same time, when you're working, I mean, in this space in particular, the nice thing is that there is a bit of money, at least, where people can be paid decently well, depending on like your skills, of course, and usually you have to be a little bit educated. But like um, yeah, in one sense, I would like to think that 5 minutes after the revolution, like you don't have to work 40 hours a week at like your co-op or union job that you have. You can instead like I can't I'm gonna butcher the quote, but like I can write poetry without being a poet, and I can like all the things that I forgot the
Yeah,
quote
the
marks.
Marx quote, it's
Yeah,
like fishing in the morning and farming in the
right.
afternoon and then read a book in the evening or something like that.
Right. So I think like I feel like in a certain sense, even though to some people, like looking at it from the outside, it seems like a almost like a redo of gig work, but just in like a white collar sense a bit. But on another side of me also likes to think that it's sort of um, prefiguring potentially, it may be a stretch, but prefiguring like what life is like in after some sort of like transition into hopefully a better economic system. Of course, there's still issues and there are still like things to be met. Like I think, especially with the U.S., I mean, just without universal healthcare, I imagine that it makes that transition a lot more difficult. I don't know if you've
Yeah,
had that
no,
experience.
absolutely. I think the prefigurative politics aspect is spot on. This idea of living the way you want to see the rest of the world live, or the kind of like prefiguring the revolution, not waiting for that day in the future when the revolution comes, but living revolutionarily today, right? Like even though there's gonna be friction points to doing that. That's fully the idea. It's okay. We still live in a world with like crappy healthcare and precarious like labor situations, and if you lose your job, you really might be in a bad situation. But we're just going to act like that's not the case and build as if this utopia already exists, and through doing so we can serve as an example for others who get inspired to maybe attempt the same thing, or maybe we actually figure a couple things out along the way of how to make that work. And so specifically with healthcare and benefits, at the beginning we had lots of plans for how we would like use the margin that we would be making on all this inflow to fund shared benefits and negotiate kind of these better rates for those expenses. That became really confusing and complicated when you're natively international. And right, some fraction of the people are in the US, but we also have people across Europe. We have people across Latin America, India, and some parts of Africa as well. And so the U.S. situation is pretty different than like a lot of other countries, and between other countries it varies a lot, like the level they can be have access to with healthcare. And so yeah, we ended up like partnering with Opolis, which was a project started exactly around this problem for Americans. And so today, like dOrg members, as well as lots of other DAOs are using them, can basically opt into funneling their crypto income through Opolis payroll system to get this like co-op of benefits. And so I think this is just a small example of sort of what I'm talking about, where you're not committed to one DAO, you're not committed to one co-op, but you overlay these networks of mutual aid that help you achieve whatever mix of things you need, right? So I use dOrg for like my intellectually stimulating crypto software development needs, and it helps me like improve in those skills. And then I can use Opolis to get like healthcare benefits and workers comp and basically tax optimization. And so it's still so early, but you see more and more people like, okay, I'm going to also be in let's say FWB, Friends with Benefits, for this like social club, and so people have their own mix of options.
Yeah. One of my like one of the things that I've been thinking is that like a big reason why I've seen a lot of people, I mean, crypto people who are based in the US become really, really interested in Europe, maybe is partially because of like this question of like I mean, labor rights a bit. Like I would think that the fact that if you live in a major European country, then you will have like pretty decent healthcare without having to worry about yeah, the stuff that goes along with it when it comes to the United States. I don't know. I have this feeling that um, when it comes to, if we go like a few years into the future, it's going like the DAO space will have maybe slightly more people who are based in Europe, or they're based in the US and they just have like the I don't want to say the wealth, but like the ability to take the risk, if that makes sense.
Right. Like some people are explicitly taking the exit option. Like I actually know a decent amount of people who are either moving to Europe or entirely renouncing U.S. citizenship. But there's also like crypto presents the digital exit option, where in various ways you can opt out of corporate employment or precarious freelance employment, and start a DAO or join a DAO. You can get out of like the money system, and the monetary policy by using crypto to use to save and invest in whatever. So it's like all these different like exit routes that crypto is setting up, because you know it's too hard to push and voice your difference in a monolithic, really archaic, like falling apart system.
So a part of what dOrg does, you guys work on a lot of these different existing right now today, like DAO frameworks and DeFi protocols. But one of the things you guys mentioned is that you guys try to have a type of long-term alignment. So I'm curious how you guys think about long-term alignment and like what that means.
Yeah, totally. So we have a couple ways of doing that. I think a really simple one is culture and filtering. So we're really careful about who we let in. We're not like a DAO that has a tradable token where anyone can go on Uniswap and buy a dOrg token and hop into our Discord and start contributing. We're really careful and we govern the membership process. And so, someone will apply if they have a skill that fits like a need that we're missing. They can write up like a background on themselves that'll get debated in our forum, and then a proposal on Snapshot will be made on whether or not to let this new person in. And there's other ways that we can kind of like create long-term alignment through culture. Like a lot of DAOs have been going down similar paths of biweekly community calls and retreats, like in-person retreats. We did our first one in Barcelona this year with about 25 people out of like the 60 to 70 or so that are active. But in terms of crypto economics, we came up with like a really simple mechanism that I surprisingly still haven't seen tried out in other areas. But basically, we have like a lifetime earnings weighted reputation. And so with every dollar that you earn from dOrg, you also earn one non-transferable rep token in dOrg. And so rep is the ultimate unit of account in dOrg. Rep weights voting power, and then it also gives you a proportional share of our quarterly token bonuses. So throughout the year, we're earning stable coins from various crypto projects for labor that we're providing them, and they also give us allocations of their native token, right? And so there's a split that happens where some percentage of the money coming in stays in the wallet of the sub team that's working for that client, and then another smaller percentage goes to the DAO, right, as a pool to fund our shared expenses when it's stable coins. But when it's the project's native token, that actually just accrues in our treasury, and then we flush it every quarter to all the members in proportion to how much reputation they have. So this is this like really simple mechanism that keeps people incentivized to keep working through dOrg, as opposed to like leaving and independently working with clients or going full time with some client that's offering them an allocation of one token when they could be getting this like kind of index on all these other tokens. And so even if the project you're working on ends up going poorly for whatever reason, you're kind of hedged into the different projects that the collective is working on.
Nice. So yeah, it's like a quarterly bonus type of thing.
Absolutely, yeah. Rep weighted quarterly bonuses.
Nice. So what is like the average day of someone in such an organization? What does that look like for someone? If you're talking to someone who is non-crypto native, who doesn't know shit about this, how do you explain dOrg?
All right, so you wake up, you get your coffee, you open up Discord. There's 800 messages. No, usually not that many, but it's a mix between working on client projects and then helping out with like the operations of the DAO itself. And so we have this like pool of funding that any member of the DAO can tap into for any sort of improvement work to dOrg. So that could mean anything from like designing new merch that we want our members to have, or like helping talk to lawyers about like tweaking our client services agreement to have stronger payment terms. So anyone can kind of jump into that. We call it like the swarm, and then they can log their hours, and then everyone can like peer approve the hours at the end of each payment cycle, and so then those go out in a single transaction. And then on the client side, yeah, you basically have these different channels for the particular clients that you're working with, and you can you know see the updates of the development needs that they have. You can go into, usually GitHub or GitLab and work with the task boards there on the different like either design or development tasks. And then we mainly do like hour based compensation, but we're also kind of experimenting with other like bounty systems and like more milestone based payout systems. But our de facto across the DAO, we have like templates for people to log their work and log their hours, and then basically sign off on the hours and work logs of others in their subgroup. And then that results in like a payout going out. So I don't know if that answered the day in the life question, but it's just a lot of hopefully not too much jumping around. People have like to focus on a couple things, because if you're on too many projects, yeah, you lose focus. So yeah, I'd say anywhere from 2 to 3 projects per person, including internal stuff.
What kind of tools do you guys use to like manage all this?
Largely Discord, and then we have like a discourse forum for the more structured conversations around governance, and then like approving new builders that want to come in and approving new client engagements. And then we also, yeah, on the crypto side, sorry, we have we used to use DAO Stack, but it became unwieldy from a gas perspective, and like it had like mechanisms kind of that we didn't need at the time. So we migrated to Gnosis Safe snapshot setup, and so it's the kind of typical signal voting, and then different wallets that have different signers that follow what the snapshot tells them. And then we're also working with Gnosis on their Zodiac extension pack to build like basically apps that will automate a lot of that. So instead of needing the trusted bridge between the signatures and the execution, we could have the automation so that the funds can only get released if there has been an on-chain vote to do so.
Then is it sort of like when you start a new project, you spin up a new Gnosis safe? That is sort of like the
Exactly.
subgroup. Yeah, and then you have like I guess a master safe with like the larger group, and so you kind of in a
Yep.
way, even within the organization, you provide a certain amount of autonomy for like the smaller group that is working on like a specific client project. So I think in a way by maybe reducing that size and that oversize to a certain extent, I would think that improves actually like the democratic input from an actual like person who's working on the project.
Right, exactly. So when a decision is being made from the treasury, it's with that percent that's been coming out of all the other project safes, and so we can really focalize the attention on important matters. Like we just have this one monthly payout for all of the expenses and like the swarm like activities happening. And so there's not just this constant barrage of proposals of, hey, I want to get paid for, week 2 and 3 of project X, and hey, I want to get my month's payment for project Y. Also, it ends up pushing like problem solving and decision making to like a really local level, because if there's a conflict on like a payment issue between a client and dOrg, or between dOrg and a builder, that usually happens entirely at the project safe level, and only ripples up to the DAO if it can't be resolved there. And 90% of the time, it just gets resolved at that level between the people that are involved in that particular instance.
Yeah, that is very very interesting. This is like yeah, this is like I don't know, future modes of production here. These are the seeds of it. I think it's really interesting. Hey everyone, if you're enjoying this episode so far, be sure to subscribe, leave a review, share with a friend, and join the crypto leftist communities on Discord or Reddit, which you can find links to in the show notes. If you're enjoying the interview or find the content I make important, you can pitch into my efforts starting at $3 a month on patreon.com/theblockchainsocialist to help me out and join the newest patrons like Gwenel, Red, and Zachary. Any amount really helps since making the stuff isn't free in terms of money or time, and as a patron, you'll get a shout out on an episode like I just did and access to Patreon exclusive content like Q&A episodes where you can submit and vote on questions you'd like me to answer, and I'll give my thoughts in roughly 20 minutes. Of course, I'll still be making free content like this interview to help spread the message that blockchain does not need to be used to further entrench capitalist exploitation if we put our efforts into it. So if that message resonates with you, I hope you'll consider helping out. So yeah, thanks for listening, and I hope you enjoy the rest of the interview. Yeah, so what has been the process of building such an organization? You've mentioned some of the like issues before, but like I imagine there are other issues like how do you deal with people who are living in low cost versus high cost countries, and like these type of issues I imagine pop up.
Yeah, almost from the like very beginning. So we started with members from different parts of the States and Europe, which were comparable cost-wise, but very quickly we had members join from Spain, which was lower cost, and also Venezuela. And so we were instantly faced with this question of, okay, like the rates that people make and the cost of living in these places is quite different. And so, but super early on, we decided like we don't care where anyone lives. Like we're trying to create a better system that doesn't like pay someone a quarter of someone else for doing the exact same work. Like that makes no sense in like a group of peers that are all like, let's say doing identical work. And so we ended up always looking at things from the perspective of um, percentages of the budget available. And like we had the luxury almost, although it's more of like a difficulty of dealing with revenue rather than fundraised money. And so it's more complicated if you like, let's say, raise $1 million and then have to decide on like salaries for various people. Although I think, lots of people have managed to figure that out. But what we were doing is, getting amounts of money from projects that were paying us for work. And it's like, okay, you believe that this value we're providing is worth this many dollars. And so, if I'm doing 33% of the work and two other people are, we should just split that, right? Minus whatever margin the organization is going to keep. There's no reason that me being in a lower cost country should mean that you get, 40% more than me. And so that's just kind of something that I don't think we sat down and really thought all the way through, but we had like kind of convictions and we just kept going with them. And now it's just completely been normalized. And like nobody, like most people don't even know where in the world other people are. But it's resulted in like very cool things happening. Like people all of a sudden like getting really seriously having their life changed, right? So being able to afford like bringing their family out of like a political crisis and moving countries and stuff like that, whereas like someone living in Seattle or San Francisco was making like an average or below average salary. And so you have this kind of like geo arbitrage that I've literally watched happen, where people from lower income countries were started moving out, and people living in higher income areas started moving to like lower income areas. Not completely, but sort of like a leveling where it's like, okay, let's just like nomad, or I'll meet up in this place. And so I think it's kind of a precursor of what's to come, especially with COVID, with like the remote work wave, but especially with DAOs, where they're basically agnostic to where you are. And it's really looked at as like, okay, what value are you providing to this community relative to other people? And I haven't seen that always be the case in the way DAOs approach things. Like earlier on, there was another DAO that basically took like another approach, and I saw them like really asking people, where do you live, and then like discounting things. And I think that's just way harder from a logistical administrative perspective in a DAO where things are globally native, and just doesn't make sense.
Interesting. Yeah, because I would think that if you try to do this exact same setup, except you have, I mean, just like a traditional corporate like type of hierarchy, then you would have like what the second DAO is doing. I guess like what I'm hearing is that because the organization is set up very cooperative like, and because like there is not so much, you're not alienated so much from your peers, then like you don't really, your decision around pay is not based solely on the market.
Exactly. We're constantly negotiating the tension between the market and our collective. And so, but we have both of those factors at play. And we actually have like designs within the DAO to further balance those. For example, we have this idea of like basically a sales commission, right? So whoever like sets up a project, gets the team together, talks to the client, drafts the statement of work, has a guaranteed percentage of the income that comes from that, which is actually like equivalent at the moment to the percentage that dOrg, the organization, would keep. And then there's a larger percentage that goes to the actual builders working on it. And this makes it so that the sourcing person, the salesperson, and the builders on the team are aligned, right? They want to get a higher value for their time, but they also don't want to make it so high as to be a burden, higher than the value actually being provided, where the client will either say no, or they'll be with us for a bit and then try to leave to find something more reasonably priced. So there's kind of these like self-equilibrium dynamics at play, both within and between the parties that are working together. Yeah, and I think it's also interesting for everything to be transparent by default, right? In a corporation, maybe you have a really benevolent dictator in the corporation who does publish the salaries of everyone, but that would be very against the norm, right? And usually you have nobody has any idea who other people are making, except for those at the very top or those administering the payroll. And that leads to just all the problems that like you hear about with discrimination and even just the surplus labor exploitation argument of the giant percentage that is kept by the coordinator, by the operator, by the financer. And so with us, it's incredibly clear what the percentage is, and it's collectively decided what the percentage should be. And if it seems too high, we can lower it. If it seems too low, we can raise it. And then we all have shared control over what's done with that margin. And so, if we just want give me the cash now. dOrg should say really lean, then we can keep that percentage super low and really not invest anything into our operations and our growth and our benefits. And everyone can get the highest pay possible. But maybe we're like, okay, I'll take it. I'll take a pay cut. We can raise it by 5% or something. But that means so much more investment into our operations. But that can go too far. And so I've heard horror stories of people working for years at similar like dev agencies, quote unquote, with complete opaqueness, and then finding out once they leave or talk to their colleague or talk to a superior one day a couple of years later, like the crazy differential that the company was making on their labor versus what they were providing.
Yeah, yeah, no, I've worked in consultancy before, and when I learned the actual rates that they charge versus the amount of money I received per hour, I mean, it was disgusting. It was like how even in this very white collar work, you are severely exploited. And just part of the reason it's not that like, oh, I want 100% of everything that was made to go to me. It's that you don't even have a choice. You don't have any democratic input, which I think it's very, very, yeah, just a very, very different experience if you do have input versus it's just purely dictated by whoever's above you in the ladder.
Right. And with crypto, we can get a lot more sophisticated over time with how we make that trade-off happen in terms of democratic input and then also like individual preference. So, we've experimented with like a slider bar kind of thing where if you have, this concept of like time preference of money. So if you have like a high need for liquidity, maybe your cost of living is high or you have like a lot of debt, you can lean really into getting more of the cash and maybe getting less reputation. Um, but if you don't have as much liquidity needs, if your cost of living is basically handled, and you want to kind of finance the collective, like in a like micro lending kind of way, continuously, you can pull the slider away from cash and get more rep, less cash, and basically invest more in the organization. And so we've done a lot of that kind of stuff over time, of like debt IOUs and then like rep sliders to kind of not only have democratic decision making of, oh, 52% of the people think the margin should be 12%, and so be it, but also that micro level of if each individual can choose what they want, and then that folds into like a higher order emergent property of what the savings rate is.
Oh, nice. That's really interesting. So you still have a choice if you want, like, if you have like a more long term or short term view, or I guess depending on your like specific conditions at that moment.
Exactly. And that's another way I think we basically deal with that high cost, low cost issue of people working from around the world. And also it could be a matter of trust, right? Like you first join an organization, you just heard about it on the internet or a friend told you. You're like, I want the money. I don't care about the, equity in this experiment. And then over time you're like, oh, these people are really cool. This is quite interesting. I think like this rep is gonna like be worth more over time from these bonuses, or maybe I just want to be more staked into this community and have more influence. And so over time, you might lean heavier into rep and away from cash.
Oh, that's interesting. It seems like a mechanism to provide for like a type of fluidity in work where it is answering that natural problem that I think that would occur where if we live in this type of like new world where you can be in one DAO and then another DAO and switch between the two and you have four different projects or whatever. There's like this natural problem. Okay, well, how do you retain people? How do people stay within your orbits to work for the collective? And just like providing them more democratic input like this seems like something that probably helps with that.
Exactly. And the design space is so wide open for figuring these things out. I mean, when you're actually like doing it day to day, you just see the possibility space before you and you're like, oh my God, like nobody is thinking about this. There's like so much room for creativity to like figure out new mechanisms. Like this is just the tip of the iceberg.
So what I also understand is that dOrg is also it was one of the or I think it was the first legally recognized DAO in the U.S. Can you explain what that was like? How did you
Sure.
explain legally you were a DAO?
Yeah, so it was this confusing process when we were starting out of, okay, let's run as a DAO. That should be simple. We all understand how to use smart contracts and wallets. But oh, okay, wait a second. Our first client wants us to sign this legal agreement, and they need a legal counterparty, and we're just a bunch of people. Like, we don't want to like put like 7 signatures on there, and we also don't want to just have one of us have to put our name on there. And so it just basically led to this learning experience of deep diving into like the theory of the firm and legal personality and limited liability and why all that's important. And so we basically found out that there was no DAO that had like figured out how to have a legal wrapper, and like, why would you need a legal wrapper? So for us, it was basically 2 main reasons. One is limited liability. So, if you're just a DAO and, something goes wrong, client's unhappy with the work, or you accidentally infringe on trademark, then they would sue. And if there was no legal person, the law lets them just sue one. This is concept of joint and several liability, where if you don't have like a legal shield of limited liability, then any one person could get sued for the actions of any other person if the law deems you to be this like partnership. And so that's something that would be an instant deterrent to anyone participating, and would be, a big risk for all of us getting involved. And so, yeah, getting a legal entity, basically, the law says, okay, your personal assets are not at risk. You're not joint and severally liable. There's the shield around you where only the entity's at risk. If there's a lawsuit, if there's a claim. The other more immediate problem for us, like I was mentioning, is this concept of legal capacity, of legal personality, where it's the ability to act as a single person in the eyes of the law. So, when you're doing business with a corporation, they want to be doing business with another corporation, and so we have to like, look like a corporation, even though we're a DAO under the hood. And so, yeah, we're basically, okay, we're a DAO, everything operates as a DAO, but we have this wrapper around us that makes us walk and talk just like a normal company. That makes us like fit into the legacy system well enough to be able to like, provide services, get paid, pay our taxes, report and make everything compliant, and not just this like shady internet shadow organization. And so, yeah, we wanted to be legit and but work as a DAO. And so out of necessity, we figured this out. And so we worked with basically a law professor in Vermont, Oliver Goodenough, who had helped with writing a new law in Vermont called the BBLLC, the blockchain-based LLC, which explicitly allowed LLCs in Vermont to opt into having their governance happen on a blockchain. And so I think this law was originally written to protect full nodes in L1s, but when I read the wording, I was like, okay, this could work for a DAO. And so, yeah, I got into contact with like the legal minds behind the law, worked with them for months, and basically crafted like our operating agreement, our services agreement, and everything to comport basically with the framework that this law had set up. And so, yeah, we basically met a ton of interesting legal thinkers in the space through that whole process. And, it worked for us. It still works for us. But a lot has happened since then. And so, like, the legal DAO space has really blown up in the last couple of years as an area of academic inquiry, but also in practice. There's been the Wyoming law about a year ago that was passed, which is basically quite similar to the Vermont law. It's basically just saying, hey, you can register an LLC and just like mention that it's a DAO, and you'll have the benefits, but you won't have as much reporting requirements. There's also been experiments in other jurisdictions that don't have an explicit law in the books, like for example Delaware, which is really popular for incorporating. People have just gone out and created LLCs or C corps in Delaware and written into the bylaws, okay, this is a DAO, without the law explicitly granting them the ability to do so. And we'll just have to see how that holds up in courts if it ever gets challenged. And then there's been other approaches, kind of like using offshore entities that are kind of like these foundations that are directed by the DAO. So you could have like let's say a director or a nominee that has bylaws that bind them to only act in accordance with what the DAO tells them to do. So this is kind of a different approach than the legal wrapper. It's more like this legal proxy, where the DAO is this unincorporated internet entity, but it's directing this proxy that it controls in the physical world or in the legacy world. There's other approaches we get into, like the Koala DAO Model Law, which is, I think, a third way. But yeah, the journey with dOrg has been a lot of theory, but then like a lot of the nitty gritty practice of okay, we're a DAO now. We have to like make a snapshot proposal to enter into this agreement with this client or with this new builder. And then there's not actually like a document that's getting signed, but there's like an on-chain proof that we had, the intent to enter in this agreement. And so we've had to talk to lawyers to make sure that all checks out, and like putting hashes into like legal agreements and all this like funky stuff.
So legally, it's all right to use sort of like digital signatures as like a proof, as opposed to signing your signature on like a piece of paper.
Yeah, so I found so there's a couple laws out there about digital signatures that were, from decades ago, just with like internet e-signing. And there's no new laws for cryptographic signing, but you can just kind of extend those principles to make to have the legitimacy for the hashes.
Could you go into a bit more detail on what Koala is and this DAO model law?
Sure, yeah. Koala's a group of lawyers that was started up, I think, 2014, 2015, that were focused on kind of extending legal principles into the crypto space with like autonomous entities on the horizon. And so I helped them out starting about a year and a half ago with this new project called the DAO Model Law. And so from my experiences in dOrg, kind of like applying some of that to a new approach to getting like legal recognition or legitimacy and protection for people involved in DAOs. Um, and so the approach taken there is pretty different than both the proxy approach and the legal wrapper approach, because it doesn't actually require a DAO to register with the law. It's basically a set of requirements that if a DAO out there follows those requirements, whether knowingly or not, the law covers it as a legal person with limited liability, without basically needing them to sign up to be a legal person in a particular jurisdiction, which is just not realistic, and it creates central points of failure in basically existing models where you would go with like a offshore proxy or like a legal wrapper. And yeah, I really was interested in how they were thinking about it, and so yeah, I just helped out with the drafting process over the course of a year, and then we published it a couple of months ago, and now it's being kind of debated or potentially going to be adopted in a couple of jurisdictions. But it's basically this concept, if you're not familiar, a model law of writing out like a law that then can be pulled into any jurisdiction and modified to work with their local laws. So there, for example, there's like a pretty famous like LLC model law, and lots of jurisdictions in the U.S. just kind of import it wholesale or tweak a couple parts. And so the idea was, if we publish this and have like a lot of like thoughtful people around the room for drafting it and get a lot of feedback, then it could be something out there that states could adopt to have this forward thinking like approach to how to integrate DAOs into the legal system.
Yeah, I want to ask you some questions. Maybe you can help me out with some legal stuff with bread chain that I'm trying to figure out as well.
Oh yeah. Yeah. And I would say that like there's different solutions for every different problem. So, in highly regulated areas like financial services, like these DeFi DAOs, it's probably best for them not to set up like entities in particular jurisdictions, because, it should be more this like open source BitTorrent, Bitcoin-esque thing that's just kind of being managed by people synonymously around the world. But then you have projects like dOrg, or let's say Friends with Benefits, that have to deal with legacy systems more intimately in their day-to-day operations. So, for example, Friends with Benefits is like this social club events DAO, and they have to book venues. They have to buy insurance because people are meeting physically in person. In dOrg's case, like I was saying, we have to like sign a contract with a corporation that wants to pay us to provision software development services for them. So, we need a legal entity for those reasons. But even within the sphere of those that need some sort of legal proxy or legal entity, yeah, there's just so many trade-offs, and every lawyer you talk to has a different opinion, and there's barely any lawyers who even have an opinion because most are just waking up to DAOs this year, and it's been really like fun to watch the kind of big law firms that are popular in crypto, a year ago say, "Oh no, we don't deal with DAOs. That's weird," and now they're being pressured by their VCs or whatever to figure out how to deal with DAOs.
I mean, do you have any thoughts for like, I don't know, more, let's say more radical DAOs who want to go the non-state route?
Yeah, I think it's all about like risk mitigation and minimization of like admin overhead or problems that might short circuit the DAO-ness of a DAO. Um, so yeah, I think all approaches should be tried, and then there's other like mechanisms that over time I think will make the legal side of things less necessary. So, for example, today there's really no great arbitration systems live, and so the legal system is this fallback for disputes with between DAOs or with a member in a DAO, which hasn't really happened to my knowledge yet. A couple of cases, but it hasn't blown up yet. But over time, we're going to have like LexDAO created this escrow utility where you can put funds that are supposed to pay a contractor in there and have a third party that has to sign off for the funds to move. And then you have more like sophisticated network systems like Claros's jury system, where you could like take a debate and then take it to a random selection of jurors who will weigh in on the case based on the facts presented by both sides. And then there's also new primitives for basically like DAO to DAO deal making that really haven't come to market yet, but that are in the works that I think will prevent a lot of like the legal problems that can arise in B2B transactions, like Gnosis's conditional tokens framework, where you can kind of set these like Oracle based conditions for when a token will be redeemable. And so you can do joint ventures between projects with that sort of thing. Or UMA has the KPI framework, KPI options, where like a token is only has value based on the way they've set it up if like these off-chain metrics are hit, like, oh, we need to get to like 800,000 daily active wallets or something, and this token will be worth this much, and we'll set aside those funds for that, and if we hit that much, the token will be worth that much. And so I think like if you can take this approach, this crypto native approach of crypto economically incentivizing particular outcomes, then you can avoid the penal approach of like punishing people for not achieving the outcomes they promised they would.
Interesting. Yeah.
So I really see the legal stuff as temporary. To be honest, like maybe there's a place for it permanently as like a part of the ecosystem and how it integrates. But if people are clever enough and if the tools work as promised, or as we hope they will, then I would hope that we have these like really robust games, right, all over the place. These optional games that people can opt into instead of like a coercive legal system that people are like forced into.
Nice. Very optimistic.
Have to be.
Yeah, yeah. So we talked about this very briefly before, but like I know you have some thoughts about different radical projects, or I guess radical movements that have existed in the past, and mass movements. And I'm wondering if you have any thoughts on what crypto can learn from these previous radical movements and thoughts, so that crypto doesn't become, I guess, co-opted by by capital and by the state, and is actually as decentralized as it wants to be and proclaims to be.
Yeah, so I definitely have an internal debate about this. I'm not sure. I think that crypto needs to like figure out a framing for for the whole like broader movement or project that is a bit more political and explicitly about liberation, um, not just fixing broken systems, but like creating systems that like achieve goals that like many movements in history have tried to achieve, and lots of different projects today are working on, like outside of the tech sphere. And so I think there's this risk that crypto just gets like boxed in and kind of gets its legs chopped from under it as, oh, it's just the latest wave of tech innovation. Like, oh, it's just mobile, right? We had mobile, now we have like IoT, we have crypto, AI. Um, and so I think like, for example, Bitcoiners have done a good job, at least on the right side of the political spectrum, um, of keeping the politics at the forefront. And I think the leftist circles that are more interested maybe in DAOs, Web3, haven't quite stepped up to the challenge. There's sort of this vague do-gooderism of, hey, public goods,
Apolitical do-gooderism type of thing. Yeah.
apolitical do-gooders, exactly. And they're not like either aware or like they're turned off by like the experiments that have been going on for hundreds of years, in radical spaces. And so I think part of that's because the narrative is largely controlled by VCs who have a very particular set of interests. Um, but also, it's just a lack of awareness, and I think people are technical, they focus on the technical problems, and they walk into like the naive social traps that past revolutionaries or radicals have walked into. So I think looking at past movements, their successes and failures, like on the Russian Revolution, Spanish Revolution, 60s counterculture, even like the American French Revolution, learning from what happened there is important, because history repeats itself if you don't study it.
One of the things that does still it still bothers me is just the amount of venture capital that's in this space. Even though it's meant to be a type of like autonomous space, there's like it's undeniable. Like Anderson Horowitz is like right over everyone's shoulder. Like, you need money, you need money,
Right.
just tossing money like crazy for any single crypto project that comes to their door. It seems.
Yeah, I think there's a really particular reason for that, and it's okay in the interim if it continues, but it's really a huge risk, like you're saying. And the big reason to me is one is that wealth is already concentrated, and so if you need capital, you have to go to the capitalists today, right? So you don't have the distribution of means that can like facilitate these kind of like intense projects that take lots of time and lots of people's efforts who have high costs of living to pull off. Um, but another barrier there that's keeping that wealth concentrated is a lot of the regulations that we already have today. So accredited investor laws, for example, which basically say you have to be rich to finance high risk projects. So I can't go to the world and say, hey, I'm looking to make this protocol that's going to help like farmers share information better and manage risk. And so I want to get $100 from 1 million farmers or something, right? Or $100 from 100,000 farmers. Um, and we're going to create this token that then you're going to have shared governance over. That's like straight up illegal, right? Like that's like um, not possible today, right? And of course, there's this paternalistic regulatory reason for that of, oh, we have to protect the ignorant peasants from scammers, and they can only do the approved investments, right? They can only buy the Vanguard ETF and the Fortune 500 stock companies. Like, no, you can't play in these big boy, sophisticated financial games. And so I think crypto is largely like blowing the lid off of that by making it so easy to do it anyways, which is quite interesting. And it's kind of like this geopolitical game theory where if the US wants to be really strict on that, others won't because they'll see opportunity there. And so the opportunity will go there. You see a lot of projects excluding US participants. And so it's just shooting yourself in the foot. So again, I'm optimistic that the game theory will play itself out, but I think there's like distinct reasons why it's happening the way it is. One more point there is that I'm also optimistic by like crypto itself being a mechanism for reducing the cost of capital and democratizing the ability to basically create new forms of like value, representing value and credit creation. So today we have like monopolistic control over like all forms of value, right? So you have like a couple large governments and central banks that basically control like the units of supply of currency and authorize, basically deputize certain financial institutions to issue credit from those units. Um, and in crypto, like that all goes away. Like you have, I can create a token tomorrow that represents this weird IOU or this like future KPI option or anything you can imagine. Anybody, given the right tools, could build. And so I think what you see over time is just this democratization of capital formation instead of always having to like, go and kiss the ring of the big mob bosses who run the show today. You can go to the 100,000 farmers, or you can go to the little niche subreddit that's really into some esoteric topic to get the financing that you need. And they don't just have to give you USD or even Ether. They can give, you can create new forms of value on the spot and then have these kind of like value flows between them and even coalitions between different currencies or community currencies to bootstrap value through mutual credit.
Yeah. I think one of the, indeed, what you're saying, like, I think that the trap that some people on the left fall with like, I think it's part of this issue of framing everything in like this two sector idea. You have the private sector and you have the public sector, and at least in the public sector, there is some democratic control. It's very limited, and I think it sort of goes against the principle of like, or the concept of a lot of different socialists call this. I mean, under capitalism, the state is like a bourgeois state. It's a dictatorship of the bourgeoisie. So it's not really like a, I don't know. It shouldn't be, in my opinion, because of that, it shouldn't be seen as like the savior of like the working class or something like that. But I think because of this, it sort of miss out on the what may seem as like the more like detailed type of criticisms you have to make once you're like looking deeply inside of the financial system, especially when it's intertwined with law. Like, you know, as a leftist, you probably are just like sick of it. You don't want to get near it because it's like and to a certain degree, it's kind of true. It's like a bit sickening, and like there are obvious like ways in which different racist laws or like laws that like clearly hurt the working class to a large degree. This like the investor one, it's like a very awkward one because when you think of an investor, you're thinking of like, oh, this is someone who's making money off of their capital. This is a capitalist. So like, if you believe that like, money should be abolished and like capitalism is like, should be removed, then like it's something that you want to look past and not look through, if that makes sense.
Yeah, it's like you have to consider the conditions that are leading to the arrangements we have today instead of saying, okay, I disagree with the symptom, and so I'm just gonna like ignore and look past that. You have to like look at the cause and be like, okay, I see this is like this interim necessary evil, and it gets us from B to C, and then that can help us to get to D, where X is no longer required. And so, yeah, I really like thinking in this like long game strategic mindset instead of letting kind of like uh, ideology lead the way, right? Like ideology is important, but it's a factor.
Right. It's not just ideology. I think it's more like idealism.
Right, that's the better word for it. Yeah, because it's mistaking like the feelings and the aesthetics of something with what is actually achievable and what the cause of something is and how to solve it.
Are there any other like specific movements that you wanted to speak about?
Yeah, I mentioned some historical ones just like kind of generically, but there's definitely a lot of modern movements that I think would be aligned with crypto, but have been turned off from like the dominant discourse, which is like get rich quick centric, but or tech centric, right? Or just like high finance, Wall Street or Silicon Valley centric. So I think that if we can speak more like you do to the language of the left, then we would find more allies, right? And so I think this is already happening. Like in some interesting ways, this year I've seen more positivity from the world of like let's say activists, artists, co-op people towards crypto than in past years where I tried to have those conversations and kind of been shunned away right away. It's like, oh, you're a crypto bro. You're just looking to tokenize us and make 100x. So I think finally people are seeing like beyond the corporate rhetoric. Like remember in 2017, it was all like blockchain, not Bitcoin. We're going to make these like corporate intra blockchains, and a lot of that has gone away. And the community has really stayed strong and gotten stronger. I think through COVID, crypto really got like yeah, like a powerful boost of like culture and confidence. And so now you're seeing that emerged with like the NFT boom, which also got pretty disgusting, but it did also bring in like some really thoughtful, people in the arts and in the sciences that are looking at NFTs as a mechanism, not just as like a financial asset.
Yeah, I didn't know shit about art beforehand, and now I've learned so much about art because so many artists are now have gone into crypto that like I've learned so much from that. It's crazy.
Yeah, it's amazing to see. And I think that it'll take a while, but the experiments or the movements, the people really passionate about, let's say, permaculture or different approaches to climate change or radical politics or like anti-racist politics, immigration. They're not looking at crypto yet, to my knowledge. And so or even like indigenous movements, who, are getting constantly exploited by like the governments where they live. Like I see crypto as really this like tool, this weapon of liberation for any group, right? Because it's programmable. Obviously it has its biases. It comes from a particular world and canon, but just like the web, ultimately, it's really beneficial for these like groups around the world that are focused on different projects to have a Facebook page or to have an Instagram page. They benefit immensely from that. And so, when I travel, I always, if I go to a place where they're looking for donations or investment, and they're kind of doing it in this like traditional way, grassroots way, I try to tell them like, hey, you should throw like an ETH address on your page and set up a multi-sig for your community to manage the money that comes into there. These little things that can make the kind of practical affordances of crypto clearer to people rather than just like the hype and the discourse around it.
Thanks a lot for taking the time to come on. Maybe just to finish off, you can let people know where they can keep up with you and your work.
Sure, I think Twitter is probably best. Ori Shim, that's my handle.
Cool. Thanks a lot, Ori.
Yeah, thanks.